Hey guys, Joe Wehbe here, Managing Director of Sydney Listings. Just going to talk pretty comprehensively about a more generic market update today, considering it's the end of financial year. And just talking about some things that are happening in the market on a macro level, on a micro level, and which way things are likely to shift going on from here. So let's jump right into it. We're at a very interesting point, especially post-election. A lot of the uncertainty that was kind of enshrouding us pre-election has really been alleviated with a result that is definitely good for the property sector and those of us who work in the property sector. So because of the coalition victory, we're basically seeing a lot more stability, a lot more confidence in the market, and that's been buoyed by, some policy changes. So the first thing that we've started to see is some relaxation around lending, and we can talk more about that if you're interested in knowing what those kind of relaxations look like. But it's basically less pressure on the lenders. So that was one of the big clampdowns after the last big, boom in the capital cities that really started to come down late 2016, early 2017. A lot of the APRA regulations and whatnot, you've heard a lot about those in the news. So a lot of that is really starting to loosen off. And that's putting more capability, for buyers to get into the market. So a lot of other agents are seeing, a lot more buyer activity and stuff like that. So that's been recorded across the board in terms of more people showing up at open homes. So that's a good measure, to start to see that sentiment kind of recovering a bit. So what many people are predicting at the moment, and I do agree with these predictions, is that we are starting to get to the bottom of the cycle in the capital cities, particularly in Sydney and Melbourne. Obviously, focus much more on Sydney at Sydney Listings, but it's all interesting to keep track of, So, markets do work in cycles, for those of you who don't know. So this was, going to come sooner or later, especially in a city like Sydney that has still such strong population growth and international migration rather than interstate migration. There's still a lot of appeal to live here. So we're still seeing that buoyancy, and it's starting to, come down and bottom out, right? And then obviously it will start to kick back up. It's very unlikely, there's no real indication that we'll get this sort of boom, those massive growth figures, property figures doubling, very quickly, things like that we saw in that sort of 2011 to 2016 boom. But what we're likely to see coming out of this slump in the cycle is a steady rate of growth. Not quite as, sexy in a way or crazy, but that is probably a good thing. And most people will argue that that is a good thing. That's not more of a healthy sign for an economy and more stability. And it's a more stable kind of market to be investing in. So that is probably one of the take-home messages, is that I was very quick to tell people, especially a lot of young people, friends and things like that, who would have been first home buyers, not to rush over the last 2 years. Just because if you look at the data, it probably wasn't the best time to jump in. It always depends on strategy though. Now looks like a very promising time. But again, don't get the FOMO just because the market is bottoming out and prices will probably start to slowly increase at some point again in Sydney. Doesn't mean that you got to rush and make rash decisions if it's still a stretch for you to afford property. We do very much advocate here responsible transactions and responsible investing. Just follow the same sensible procedures and processes and proceed with your normal due diligence, and we can help you figure out what that due diligence looks like. But certainly if you're in a position to buy, this is a good time. So you still got a little bit of distress, you still got some opportunities coming up with the down market as it bottoms out. It's hard to pinpoint exactly when the bottom will be. The crystal ball's not that good. But you certainly want to be on this side of it, ideally. If you're on the other side of it, is the end of the world. Prices start to go up a bit again. Probably not, because you're still going to see that value. And, the indicators are very good for you to see that value. I'll talk quickly about the difference between units and detached housing. So apartments, still a lot of oversupply with apartments. We're still seeing big vacancies in some areas for rental, particularly in areas with oversupply and particularly in areas or where we're leasing out older apartments. So investors and landlords need to keep that in mind. and people purchasing apartments. You've got to think about that. There is still that oversupply, and still it'll be houses and detached land dwellings that are selling easier and renting easier, more than apartments in oversupply areas. It's not painting all apartments in Sydney with one brush necessarily, but it is certainly generally better to be targeting detached property and land in Sydney if you can, ideally. All right, big disclaimer on this is that within cities there are submarkets, so it's not like one city performs uniformly across all suburbs. There are patches within cities and there are patches within suburbs, so keep that in mind. But yeah, definitely a good time to buy, in my opinion. You just be precise and clear about it, and do your homework and get in touch if you need help. If we can't help you, we'll put you in the right direction, point you in the right direction, that is. But yeah, that's basically just a rundown of what's going on, what you can expect. And yeah, we look forward to just bringing you more updates as things elapse, where you're going to see how it all goes down. Thank you very much, and talk again soon.